Hi, Andrew Bell coming to you today from the hinterland region of the Gold Coast, a little chilly, at 520 the Panorama Talai. Thank you for all the positive feedback about our location shops of late. I'm glad so many people are enjoying looking at the wide variety of spectacular properties here on the Gold Coast, and this is certainly one of them. It is no surprise that I've also had a lot of questions about how we see the Gold Coast property market following and rolling out as we move forward post-election. And I'll share with you today some thoughts about that. For now, let's start looking through this amazing property. Property's on 14.73 acres and, as you can see, with the elevation to provide stunning skyline views of both the hinterland and to the skyline of the city. And that comes from this Hinterland Ridge location we're on, which provides complete privacy in the most luxurious setting that you could imagine. The home has been designed to encapsulate the stunning surroundings from every room of the home. And of course, it has all the features you would expect for a premier property. Those features include a master suite with walk-in robe, an ensuite and a great outdoor spa bath. The living room has a romantic fireplace and glass doors that lead out to the entertainment area, which has a servery and overlooks the pool. Timber flooring is a prerequisite for a home such as this, and of course it does have ducted air conditioning and a kitchen with stainless steel appliances, gas stove, cooktop, stone bench top and a servery out in the outdoor living areas. We invite you to come and have a look for yourself. Details are on screen now of our marketing agent Josh Thomas, and just contact and he'll make a time for you to inspect. At any time of the year it is worth the drive, but at this time of the year it truly is spectacular. I'll now share some of my thoughts about the market ahead. The real estate market is always cyclical, always has been, and most probably always will be. There are many factors that come into play that form part of that cycle. Now, cycles do not occur simply because of a time frame. We talk about cycles ranging anywhere from 7 to 10 years, but events don't just happen purely because it's year 3 or 4 or 6, but because of certain factors that have come into play because of the cycle that triggers different events. Now, the Australian property market peaked at various times in various locations throughout the country during 2017. History has always told us, through past cycles, that the correction phase that follows a peak in the marketplace generally takes about 2 years. Part of the cycle is that the correction must happen. When prices rise during the boom years, there's always some give back. Ultimately, as the market corrects and the economy along with it, there are reactions from the marketplace, a consequence of the slowing phase of a cycle. Now, part of that consequence is rising unemployment, and we saw that happen just recently. Now, our unemployment has been falling for many years and got down to 4.9% several months ago, but it started to increase, where last month we saw the rate rise to 5.2%. Now, the consequences of that is that the Reserve Bank is going to lower interest rates, and that of course feeds through to the real estate market, more buyers. We also saw last year APRA and the banks tightening lending policy. They were concerned that throughout the boom years, there were risky lending processes and practices. Now that fear's passed, and APRA only in the last month has called for an easing of the finance regulations, where previously loans could not be provided to borrowers unless they met the 7% interest rate serviceability test. That's passed. And in the closing days of our recent federal election, significant attention was also given to first home buyers, who have now been provided with the best offer they've had in a mighty long time. This will feed through to more buyers for the real estate market. And with the passing of our recent federal election, the fear that existed about the potential wiping of negative gearing on resale properties and the increased capital gains tax has evaporated completely. And there's a more positive attitude towards the real estate market. We're mighty busy at the moment. So all of these factors I mentioned above means the real estate is moving into a more positive setting. Irrespective of the election, many of these factors were already in play. The price correction had already occurred. The easing of finance was always going to happen, and the reduced interest rates were necessary to stimulate the economy and ease unemployment. However, no question, there is an incredible relief the election is behind us. We now live in a world of low inflation, so do not expect significant price increases. In the 1980s, inflation and wages growth were much higher, as were interest rates, more than double what they are these days. As a consequence, properties doubled in value every 6.3 years. Now fast forward to the last decade, where we've been in a much lower inflationary environment and much lower wages growth, and of course, interest rates have been at historic lows. It's no surprise that growth over the past decade has been around 6% per annum, which means that properties double about every 12 years. There's no reason to expect that to change. So my forecast is that the cycle in any event was going to see us move from price correction to a level market by the end of 2019. With the election outcome, it's likely to see that happen even sooner if it hasn't already happened. I expect brisk activity, and particularly after the drop in interest rates, and that take us to a much healthier, stable marketplace, if we're not already in that space right now. However, do not expect to have boom times coming, as the cycle will tell us that we will be entering a stabilisation period. Well, that's it for this week. I look forward to being with you in a fortnight's time, and in the meantime, let's look after one another and stay safe.